900. All that was gone, and there was no recovery in the last 1 hour of trade. So, one is used to bounces mid-session, late session, but nothing to be found today. Take a look at, what else happened. 1% plus cut on both the mid and small cap part of the market. Like yesterday, the small cap index sold off a little bit more in the last 30 minutes of trade. The big news story in that sense was what the Bank of Japan did, which is, of course, hiking interest rates. First since 2007, negative interest rate regime gone. Consequently, the price action was interesting. The yen fell. When you see a hike, the corresponding currency strengthens. But here, maybe because it's by the rumors, held the news kind of psychology, because it was so well telegraphed, and also because many called what Japan did as a dovish increase, dovish hike. The yen fell almost 0.8, 0.85%, and the dollar strengthened. Dollar index was up about 0.5%. We're just under the 104 levels. And I mean, dollar index, of course, maps out what it did against developed market currencies. But even if you look at, say, the Asia dollar index, the dollar was stronger against emerging market currencies broadly. This is done, and this is, of course, dollar strengthening is not what emerging markets want, but the next event risk is FOMC. That is, of course, tomorrow evening, to which the market here will react to on Thursday morning. Ekta.
Well, yes, absolutely, Prashant. I think that's the reason why there was a little bit of trepidation in our markets as well. Yeah. Choppy ahead of the US Fed meet outcome tomorrow. So the US FOMC is likely to hold rates as they continue to focus on inflation. Crude prices is the other niggling worry because it's at 4-month high, so around $87 per barrel for crude prices. For today, the key drags continue to be the Nifty IT index. So the Nifty IT index went home with losses of almost around 3% odd. And on a month-to-date basis, the Nifty IT index has lost around 5% odd. And what we did see was a weakness in the FMCG index as well. So the Nifty FMCG index lost around 2% odd. It's lost 7% odd on a year-to-date basis. So do watch out for the weakness which is emerging from that space. Tata Consumer, Nestle, Britannia, all of these stocks were weak in today's trading session. But let's tell you what we have lined up and what we have in store for you on markets forward this evening. We start with the top movers of the day with Hormuz. Well, there are a bunch of stocks which are in focus today, like TCS, AB, Sunlife and Star Health. So we'll give you the key reasons that led these stocks buzzing in today's trading session. Last but not least, we delve into the key market events to watch out for tomorrow's trading session. But let's get to our first segment of the day. Hormuz joins in from the big wall with the top stock movers of the day. Hormuz, over to you.
On a down day, it's very difficult to find movers that were on the upside. So we'll start off with the sector that put the most pressure on the market, and that was IT, and predominantly led by the block deal in TCS. 4% lower there, the biggest single day drop since August of 2022 for TCS. Other stocks as well, L&T Tech, Emphasis, Infosys, HCL Tech, the last two also putting pressure on the Nifty downside. The other major sector that put pressure today was FMCG, and that was the index that saw its biggest single day fall in a month. And all of them, Colgate, Tata Consumer was the top loser on the Nifty for a long period of time. Britannia, Godrej Consumer, Nestle, all of them seeing losses anywhere between 3 to 4.5%. All 20 constituents of the PSU index were down in today's trading session, starting off with the oil sensitives considering the rise in crude oil prices. BP, HP, IOC, all of them trading lower. The correction in PFC continues, while Concor also had a down day in today's trading session. A particular group stock that was under pressure today was the Aditya Birla group stocks, and those were because of the OFS that was launched in Aditya Birla, Sunlife, AMC, all of them seeing losses of anywhere between 1 to 4% in Aditya Birla Money. And call it dark humor, but on a day when everything was down, the sector that was up was hospital stocks. Then Shalby, KIMS, Rainbow Children, Max Healthcare saw a bit of correction towards the end of the day. It was ending mostly positive as well, and Global Healthcare saw gains of around 2.5% in today's trading session. Back to you.
Well, gallows humor, right? Almost thanks very much for that. That's, of course, the price action today. Jay Bala of cashthechaos.com is with us. Sudip, Bandyopadhyay, Group Chairman at Inditrade Capital, is also with us. Gentlemen, good afternoon. Good to have both of you here. Jay, read the price action for our viewers. This looks a little tricky here. You've been calling for caution for a while. It's panning out.
Yeah, 21,860 was a very important support through which the market plunged through. So, this is, pointing to weakness, and I pointed to important support level at the, stock that was used for the distribution, Reliance Industries in particular. I said that 28.40 on Reliance was pretty important. That was also broken on intraday basis. So lot of critical supports have been taken out, but it's the banking index which was underperforming earlier. That's outperforming on a relative basis in the extreme short term. In my opinion, it's probably holding back for Nifty to join it, and once that's done, both the mainline indices will start to drop together.
Okay, all right. Sudip, well, we went home with cuts of around 0.4% for the bank Nifty. For the mid-cap index, we lost around 1.2%. What would your approach be going into the rest of the week, considering the weakness that we've seen, and we've had a big event to watch out for as well?
Well, I think the big event is extremely important because let's see what the Fed does more than actual action, what the commentary is, and if the commentary is favorable, at least they start sounding dovish. I think things will improve global markets as well as Indian markets. As far as specific strategy is concerned, we continue to remain our positive bias on Indian market, and we believe that structurally nothing as negative has happened, and one should continue to accumulate good quality stocks, taking opportunity of this correction. I can give a name of, let's say, Larsen Toubro has corrected. Not sure why it has corrected so much, and maybe it's a good time to buy. Same can be talked about Reliance. I think every correction in Reliance probably is an opportunity to buy.
Okay, it is L&T and Reliance, two names from Sudip in the midst of the correction that we've seen. Well, we'll come back with more questions to both of you, but TCS, right, was sharply down. Yesterday it was Coforge with a 6% cut. Today TCS was down about 4%. This on the back of a block deal. Tata Sons has sold 0.6% stake worth about, that's a large trade which happened. Rima is here with the details. Rima, over to you.
Thanks so much for that. So TCS is under pressure because there was this large block deal of about 2.2 crore shares which took place in the morning at an average price of 4,043. The price of 4,043 is about a 2.5% discount to where the stock closed yesterday, and the total deal size is approximately 8,900 crore. We understand that Tata Sons has sold stake, and they've sold close to about 0.6% stake. They hold about a 72.4% stake in TCS, and off that, they've paired about 0.6%. But the rest of the Tata Group stocks should also be on your radar, because if Tata Sons wants to de-lever further and they look to monetize their stake in the other Tata Group stocks, then this is what the shareholding looks like. So they hold more than a 40% stake in Tata Power, Tata Motors, as well as Tata Elxsi, and close to about 32% stake in Trent, Tata Steel, and Tata Chemicals.
Okay, the second top loser on the Nifty today, TCS. Thanks, Rima, for that. But the other stock on our radar is Aditya Birla Sunlife AMC. It tumbled over 2% after promoters Aditya Birla Capital and Sunlife India launched an offer for sale of up to around 11.5% equity in order to meet minimum public shareholding norms. Vamakshi is here with the details.
Well, absolutely. Aditya Birla Sun Life AMC in focus today. The stock did decline in trade today, and that is because the promoters, like you rightly pointed out, are looking to sell up to 11.5% stake via OFS today and tomorrow. Now, keep in mind the company has two promoters, AB Capital and Sun Life India AMC Investments. Now, the base size of this OFS is around 7% with a green shoe option of almost 4.5%. The floor price has been determined at 450 rupees per share, and this in turn amounts to the promoter stake sale of almost 1,487 crores at the floor price. Now, this stake sale has been done in order to comply with the public float norms. In fact, the company had to reduce the promoter stake to 75% from 86.47% earlier, and resultantly we will see that AB Capital stake post the stake sale is expected to decline from 50% earlier to 45%, while Sun Life India AMC's stake is expected to decline from 36.48% to 30%. So definitely AB Capital is encashing some of its holding in the company. So it's a mild positive out there. But for AB Sun Life AMC, the supply is expected to rise, and therefore this is a tad bit of a negative for this one as well. And that is the reason why the stock declined in trade today.
Jay, so if there is to be more weakness, we talk about TCS and tech, right? 2 days in a row has been weak. What's the weakest part of the market and what is relatively the strongest?
The weakest part is clearly the banks for me, and the strongest is, I would say, it's tough to, I would think it's a reality, but I would say actually it's auto. It's not reality. Reality is actually breaking down. Autos haven't yet broken down, so the strongest is auto. But if autos were to drop below 20,000 before going below 20,900, even that will also, be, clock a reversal. So, we got probably one more pullback to come through for the auto sector, but that will likely to be a corrective, corrective move. So, be very careful in banks. And, if you have to, look at outperformance, it's probably auto sector where you have to hunt.
Okay, all right. Well, the third stock in focus has been Star Health today. The once leading insurance company is losing market share to its peers in both group as well as the individual segments. Yash is here with the key details on this.
Well, Ekta, Star Health's premium growth has been underperforming the standalone health insurance industry for quite some time now. But that's not the only concern when it comes to Star Health. We put together some numbers which show that Star Health Insurance has been losing market share in its both businesses, individual plus group, that is the total business, and separately the individual business. First, let's speak about the total business, that is individual plus group, and the assessment period that we've taken is 2 years between March 2022 to February 2024. In this period, Star Health Insurance has lost about 1,000 basis points in market share to its standalone health insurance peers. Its market share has come down to about 45.5% in February 2024 to 54.9% in March 2022. Now, in the same period, Star Health Insurance and the sector which it operates, which is the standalone health insurance industry, has gained market share by 148 basis points, which means on one side, the sector where the company operates is gaining market share. Star is failing to capitalize on that gaining market share, but it's losing its own market share as well. In the same period of 2 years, all its peers, Niva Bupa, Aditya Birla Healthcare, Manipal Cigna, have all gained market share. Star, on the other hand, losing it by about 1,000 basis points. Shorten the period to about 1 year. Here also, Star has lost market share by about 400 basis points. Now, Star's been telling us that they're focusing on the individual business, which means the total business, the market share is naturally expected to come down. Right. But look at the individual business. There also, the market share for Star Health Insurance has materially come down, and it's all getting transferred to its standalone health insurance peers.
All right, that's a very interesting data story which Yash has put together. Yash, thanks very much for that. Sudip, not insurance, but hospitals, right? I mean, today we saw a little bit of lift here. Largely, I guess, because prices have seen some correction lately. I mean, actually last 3 or 4 weeks or so. Any thoughts on what do you like here if you do?
Prashant, I think, the entire hospital share price correction was on the back of the Supreme Court direction on uniform pricing and the instruction to the central government to come out with the regulations or the pricing norms. I think, the entire thing looks a bit odd. The different quality of service, different level of service, and different kind of facilities cannot be offered through a uniform pricing regime. In this day and age, when we are talking about free pricing, why should we get back to some kind of controlled pricing? So I think central government is also veering towards that view. And what we understand is that a tiered kind of a structure based on the facilities offered is probably eventually what will be suggested by the central government. So I think this is good news for the hospital companies that there is no blanket pricing norm getting imposed on them. And I think pretty much the correction which had happened post the Supreme Court ruling, I think that is getting covered up now when the realization is coming that nothing like that is going to happen. Fundamentally, I think we like the hospital stocks. We have seen a lot of consolidation, a lot of M&A in this space, and we believe that the same trend will continue in the near future. Consolidation is happening and will continue. As far as the stocks are concerned, I think Apollo, even at current level, definitely is a good buy. And being the industry leader, the investor will be safe with Apollo.
Okay, all right. We'll leave it there. Gentlemen, great to have both of you here. Sudip and Jay, thank you for joining us with that opinion and those viewpoints. Well, we'll take a quick commercial break here. We come back with the top corporate voices of the day and, of course, events to watch out for as we come back tomorrow. Stay with us.
Welcome back. You're still tuned into Markets Forward. Let's get you some corporate voices of the day. Then let's begin with Senco Gold and Diamonds. The company reported a good set of Q3 numbers. Its managing director and CEO said that their diamond jewelry sales went up to 40% in terms of value and 27% in terms of volume. Speaking on their margins, the company aims for high single-digit growth this financial year. The next management in focus is Shriram Finance. We spoke to its Executive Vice Chairman, Umesh Shivankar, earlier today. The company aims for strong AUM growth and guides for 15% in FY25. However, in terms of margins, the company aims to maintain 8.9% in terms of margins.
Well, we also spoke with Mahanagar Gas. Lots of excitement, lots of debate about that one lately. The company recently cut its CNG prices by 2.5 rupees per kilo. And that raised concerns that maybe it's been prompted by some government intervention. Now, the MGL management told us that the price cut, which happened just one day after the oil minister's comments, was just a coincidence, and that it was well planned and was going to happen anyway. The other, of course, big concern has been about the sort of infrastructure exclusivity in the Mumbai region, which ended in 2021. And there, the MGL management basically told us that they expect PNGRB, which is the regulator, to decide on it in the next 1 month or so. All right, well, let's just get you some opinion as well. The big decision, of course, was from the Bank of Japan. Here is Jefferies' top equity mind, Chris Wood, telling us that over the last 10 years or so, Japanese locals have been investing outside of Japan, and the latest move by Japan to increase rates could change that. More of them could look to invest in that market. Listen in.
The end of deflation is for real, and I still think there's a better 50% chance it is. Then we haven't yet had the reallocation into Japanese equities by Japanese institutions, and if that happened, there would be a huge move in Japanese equities. Japanese institutions have not invested in their own stock market. The only market the Japanese domestic institutions have increased exposure to in equities in the last 10 years or so has been US equities. The last 3 quarters, we've had nominal growth weaker than real GDP growth, and that is the explanation for why what's been outperforming in China for most of the last 2 years has been the dividend stock index, so the best thing to have done with Chinese equities is simply to own the dividend index, and 10-year government bond yield in China is near a record low. When I was in Beijing about 2-3 weeks ago, there was a record low spread between the 30-year and the 10-year government bond. So all this is classic deflationary signals. So fundamentally, Chinese equities will remain a value trap if we remain in this deflationary situation. The good news recently is there's been clearly a government support operation to buy the Chinese equities, and the target seems to be 3,000 on the Shanghai Composite. So to that extent, we're about that level. So there's support for the market. But in terms of some form of aggressive easing coming down the road in China, there's no sign of it right now. You now have a precedent of a country being removed from the MSCI benchmark with very little kind of warning, which is what happened to Russia. So if you're a global fund, and many global funds invested in Chinese equities, China is a very small part of the global MSCI all-country index. So if there's even a 5 to 10% risk of that happening, you just would rather not be in China. So you will own, if you want to own China geared stocks, you own China proxies globally who are geared into global growth. The emerging market investors have to be in China because it's a big part of the benchmark, but the global money does not, and that's why they've left. And it would take a lot to bring them back. There'd have to be huge outperformance in China for them to come back.
Okay, and before we wrap, let's get you some key market events to watch out for. Mangalam is standing by with that data.
Well, the most important thing that the market will be reacting to tomorrow will be what comes out of the US Fed, and as a result of which that will set the tone of the day. And that's not all. In the middle of the day, you'll also get the UK inflation data. So that's about the global macros that may impact. The individual local micro that may impact the course of action will also be the way Nifty Bank weekly options expiry plays out, especially given the outperformance of the Nifty Bank today on account of the Nifty Financial Services expiry. Then we have a bunch of stocks. Vedanta holding its investor meet in Mumbai tomorrow. So any sort of commentary coming in from there would be essential to watch. And then in Hong Kong, you have the Jefferies conference, which is currently underway. And out there tomorrow, the two companies that will perform will be, FS and e-commerce and BSE.
Right, Mangalam, thanks very much for that. So that's the lowdown on what to expect tomorrow as we come back. Well, it's a wrap of this edition of Markets Forward. From Ekta, me, everyone on the team, goodbye. Thanks for watching. But stay tuned. More news and updates follow on the other side.